Okay, good morning. Welcome to my morning forecast of Eurodollar on Thursday, the 26th of June. As always, we'll start on the daily, work down the time frames, looking at key areas of market structure and high probability areas of interest. So we get straight into it on daily. We can see that the swing structure is bullish, the internal structure is bullish, and we've recently had an internal break of structure. So we know that after we have an internal break of structure, we can have a pullback. So that could happen, or we could just keep going. At the moment, it looks like today we've opened a bit high, we've pushed higher, and then we've started to pull back. We do have this area of demand here, which led to the break of the internal structure. So if we look at the 4 hour, we can see that we've got new swing structure. So yesterday we broke and closed above this high. We wicked above it on Tuesday, but yesterday we've closed above it. So now we've got a new swing high. New swing high is up here. We won't know that's the high until we get a decent pullback. But we've got a new swing low. So if the swing structure is going to stay, this swing low should be protected. So we can rein in all of these areas of demand so we can keep our focus on the most recent swing structure. So in here, we have had, well, let's just look at yesterday. We pulled back into this area of demand, got a reaction, pulled back quite close to it, so this low was protected, and then we've had a huge move up. So we've now got this demand here that led to this impulsive move, and then we've got this demand here which led to the break of the internal structure. So if we're looking at premium and discount, we can see that these are the areas of premium and discount. So we wouldn't be surprised if eventually we get a pullback into these areas, and then that will fuel the move up. So we can see some bearish pressure, which is just going to facilitate the internal pullback before the swing trend continues. Okay, if we look at the 15-minute, we can see that we have again broken a swing structure yesterday. So we've got a new swing low. Potentially this can be our swing high, but we need to see how price forms before this gets broken. So in this leg, there's lots of areas of demand that we can look for. These are all unmitigated. This one's slightly mitigated, but all of these zones are fully unmitigated. So very likely to see reactions as we come into them, as we have with this one. So if I just zoom in there, we have this supply above, which could facilitate price pushing lower. So broken into demand, could see price push higher, and then that could push us to break this low, causing us to have this internal break of structure. So we have this internal break of structure where we can see that it's more likely that the internal pullback is going to start. Then we can see pullback deeper. We put the Fibonacci tool on, we can see that our premium and discount is below this level. So we have a couple of areas of demand in the discount that we can look to trade from. Obviously this area here caused this huge move. But if we get this internal break of structure, then we could look to follow bearish order flow with probably pretty tight profit targets, knowing that there's lots of demand that can get in the way. Or we can just wait until we get bullish order flow.